main thing we have tonight really is the audit, and we'll talk about that in just a minute when we get to new business. I don't have any major updates on stuff except for there was one small hiccup with the backwash pump project at the plant. And from what I gathered, they ordered more stuff, and it could possibly be running by now. I didn't talk to Jesse since about 10 yesterday morning, but they are working on it. So hopefully, and certainly with the river, it'll be a help to us. With the condition of the river, making water is hard right now. As you see, a lot of the plants around us are really suffering, trying to make water out of mud. Basically what it boils down to. Jim Bryant, he's from Johnson County. We'll let him go first. Jim's been doing our audits now for quite some time, since I came. And for you new ones, you old ones, I'm a broken record. You new ones, I say, when I started, we were like a year behind with audits, and end up having to do 2 in 1 year. The first year I was mayor, and since then we've been caught up. And Jim promised us he was going to keep us sitting on January. Have the floor.
Yeah. I believe this was I think the 2013. I think this is the 12th year, or 12th year for the audit that I've done. Yeah, those first couple of years were kind of rough. Just trying to get all the information, and I think it was almost October, but by the following year time they were done. But we got a pretty good system going right now, and you're always on my schedule for January, and I've got all my audits. I know exactly what I'm doing. You know, I got some starts in July and August, and I've always got you all in January, so it's been working out good. But yeah, I got the audit for the fiscal year in June 30, 2024, and I'll just kind of briefly go over here. First thing, I just want to read about the first couple paragraphs on the independent auditor's report. It's on page 3. And this is the first couple paragraphs. This is the report on the audit of the financial statements, and this is the opinion on the financial statements of the city of Louisa. Did I say Louisa earlier, or did I say West Liberty? I can't remember what I said. I thought I said West Liberty. But anyway, we have audited the accompanying financial statements of the governmental activities, business type activities, each major fund, and the aggregate remaining fund information of the city of Louisa, Kentucky, as of and for the year ended June 30th, 2024, and the related notes to the financial statements, which collectively comprise the city of Louisa, Kentucky's basic financial statements as listed in the table of contents. In our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, business type activities, each major fund, and the aggregate remaining fund information of the city of Louisa, Kentucky, as of June 30, 2024, and the respective changes in financial position, and where applicable, cash flows thereof for the year then ended in accordance with accounting principles generally accepted in the United States of America. So that's a clean report. It's an unmodified opinion. Like I said, we feel that the financial information that I audited presents fairly your all's financial position. The rest of the audit there, I know it's a couple pages. It's really just kind of a form letter, but you guys can kind of read that. Nothing's changed from the prior years. So, kind of go over some financial information briefly. We'll look at page 6. This is the fund financial statements for the city of Louisa, the general fund. You'll see that you had total assets of, these are fund assets. This is not government-wide. This does not report your fixed assets and your long-term liabilities. But your total assets were $935,827, with cash and cash equivalents accounting for $431,198. Now this was down from the prior year. It was about close to $600,000 the prior year, but you spent most of the rest of your ARPA money. I think there's only about $4,000 or $6,000 left of ARPA money at June 30th. You spent about $200,000 of that ARPA money. Most of it was on the property, $130,000, and a street sweeper was about $130-some thousand, I think it was. So that was the bulk of the ARPA money that was spent last year. So that's why the cash is going to be down a little bit. The only other thing for the total assets was the sanitation fees collectible from the water and sewer department. It was $229,709. The prior year was $96,000. So it's up about $133,000. There's about, you were behind paying this general fund about 4 or 5 months there. So, and really, to be honest with you, I don't know, the water and sewer, when I get to it, you'll see, you know, they had a fairly good year, so I don't know why it got behind, but it did. Liabilities, you had total liabilities, $126,000, these are current liabilities, $126,284, and, you know, that was mostly accounts payable, $41,000, you had some in your payroll tax liabilities, and compensated absences, and that's been running about the same as it has in prior years. So you have a total fund balance, positive fund balance of $809,543 at June 30th. And then the other little fund there is that youth programs fund that you have a little checking account on. It had $13,576 in it at the end of the year. If you go over to page 8, we'll look at your revenues and your expenses for the general fund. General fund had $2,326,773 of revenues for the year. Most of the revenues were pretty much in line with the prior year, except insurance premiums were up quite a bit. They were up from about $732,000 this prior year, and in 2023 they were about $651,000. So you collected almost $80,000 more on insurance premium tax. Total expenditures were $2,400,218. So you had a excess or a deficiency of expenditures over revenues of $73,445. Again, if you look at it, I know it looks like it's in a deficit, but you spent $200,000 of the ARPA money, and that is reflected in the where is it? Capital outlays right there, $400,000. That's reflected too. That's the property and the street sweeper. So if you didn't spend the money for that, which you had, you know, the funds available, you would have had a positive, you would have had revenues over expenditures, is what I'm trying to say. And you can see you had some proceeds from insurance of $19,897, and of course transfers out of $18,454, kind of subsidizing the pool a little bit there, which you've always done every year. So overall, you had a decrease in fund balance for the year of $72,002. So your fund balance went from $881,545 to now $809,543, which I mentioned earlier on page 6. Now, if you go over to page, let's go over to page 12. Let's just go over the operating revenues and expenses of the water and sewer department. Total operating revenues for water and sewer were $3,624,834. That was a 4.5% increase from the prior year. Now, this was the first full year of the rate increase that you had in January of 2023. So now there was, and I talked to the mayor about this, when I went to look at the rate increase, the rates as read, and I asked why. Apparently there was not a rate increase at June 30th, 2024. There was one taken December of 24. There was a rate increase taken in January of this year, 2025. I think it was 5.8%, somewhere around there. So you should see an increase, a bump up in your revenues this coming year, coming up. Total operating expenses were $3,213,289. And that was actually a decrease of $182,000 from the prior year. And the biggest thing was repairs and maintenance, and to a lesser extent, materials and supplies were down from the prior year. So that was a good thing. So your operating expenses were down 5.4%. So you had actually operating income of $411,545. And then you had interest income, a little bit, $1,825, interest expense of $132,702 on your loans and your bonds. And you had contributions in aid of construction of $238,492 on, most of that is KIA money coming for the projects and so forth. So you actually had an increase in the net position of the water and sewer of $519,160 last year. If you go over to page 10, on the balance sheet, mainly the thing, cash, last year your total cash which was for operating purposes. This is not your restricted cash for the bonds and so forth. But your cash was $141,307. You see that top number there. And last year it was $21,898. And this was going back, excuse me, back to the garbage collections that need to be paid to the general fund. You know, the money was there, just they're getting caught up on those, and I think you're caught up on those now.
Yeah.
On those, so. Everything else, pretty much, there's nothing really out of line with the prior years. So there's really, you can take a look at those, the liabilities and so forth. If you have any questions on those later, you just ask me about those. Over on page 13, this is the statement of cash flow. Excuse me. The number I always try to look at is the net cash provided by operating activities. This is the actual cash, you know, after you take into account the changes in accounts receivable, accounts payables and stuff like this. This is actually the amount of cash that was handled throughout the year that was generated by operating activities. And it was 1 million, you look it down about 1, 2, 3, 4, 5, 6 lines down. Cash generated by operating activities was $1,113,989. Last year was about 800 some thousand. But again, you had about $100 some thousand increase in the sanitation fees that were due to the city. So really that number should have been probably about $950 to $1 million, which was still pretty healthy compared to the prior year when it was about 800 some thousand. And why I like to look at that number is that tells me if you have the ability to cover your loans and your interest payments, and you clearly do. Because if you look over on page 27 of the disclosure notes, and the disclosure notes breaks down things a little bit more as far as your liabilities, and kind of shows what your assets and so forth are. But on page 27, if you look about towards the bottom of the page, you'll see that table. So for year ending 6/30/2025, this year coming up, you look all the way to the right, you have $805,798 in liabilities of interest and principal that's due this year. So you're generating enough cash from operations to meet your requirements, your loan and debt requirements. And let me say, out of that $805,000, you'll see the next year it's $650 some thousand. You got about $150,000 decrease. There are 2 loans paying off this year. You have the bond payable, the 2010 D bond payable. You owe one more payment of $50,000 coming this year, and that's going to be done. Then you have a KIA loan that's going to come. You got a $100,290 payment on that one this year, and that one's going to be finished. So you got 2 loans that are being paid off this year. So your debt requirements are coming down unless you borrow more money for anything. But of course, so that's a good thing. You got a couple loans paying off, so you should see an ease in cash flow, and maybe even save some of that money, like in a reserve, or for something for any future uses, equipment repairs and stuff like that. You ought to have a little extra cash available. The only other thing, there is one other report. You'll see that over on page. This is a report on internal control and compliance. Get to it. It's the report right after page 37. This is like I said, the report on internal control and compliance with laws and so forth. The only thing I have is the segregation of duties, where the office is small. Rita's in there, and of course Kathy was, and pretty much Rita's in there by herself now with some help from Jason and so forth. But anyway, that note's always going to be in there for a small city. I explain this to you all every year. So it's just a segregation of duty, a lack of appropriate segregation of duties, because you're limited by the number of personnel you have. But as long as you keep good oversight, look by the council and the mayor and so forth, anytime you need to, just look at bank statements and, just be involved, and, there shouldn't be any issues or anything. So, but other than that, like I said, water and sewer, looking good, general fund, it's in good shape, got $800,000 fund balance, and I don't see any concerns or anything right now. So, if you have any questions, I'd be more than happy to try to answer them for you.
Well, I think you've already answered my perennial question.
Your question, yeah.
My only question is, you know, we have to have a balanced budget. Looks like we got more than that, so
Right.
I'm not worried about it.
Yeah, you cannot run deficits, so, yeah. I've only had one city in 25 years I've been auditing that have been running deficits, and that was the city of West Liberty right after the tornado they had in 2012, but they finally dug out of that hole, and, you know, but most cities around here, their finances are in good shape, so, the ones that at least I audit. So, but anyway, thank you.
Thank you. After Ryan passed, and just felt like we should, as a city, do something to recognize his contribution. He coached softball several years. I coached with him. Coached at the school golf. Impacted a lot of this current generation. That's going to his impact's going to be felt for years. And such a big part of the community and everything. I thought the least we could do is a proclamation to recognize him. One day, he was number 79 for the Bulldogs, so I thought about July 9th, making July 9th Ryan Lee Salmon's Day. And let the county get involved or join on if they want to.
Yeah, so the week of July 9th, we'll remember that because it'll be right about the 4th of July. We will do a proclamation and have a little signing ceremony or something here. It is on